Good evening. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this wrap-up is for Monday evening, February 8th, 2021. And we're right now pushing, sometime after 6:30 at night. So where are we in these markets? Well, another good day today overall. We did see GME come cracking back down, got up to 72. There are no restraints at Robinhood on it any longer. You do realize AMC has dropped from near $20 back down to $5.75 today. So a little bit of earthbound, yep. GME is still a lot higher than it was when this whole thing began, about triple the price. So I find that interesting, at least. Behind me on the rest of the board, the British pound down, yet the futures were up nicely and everything else pretty much in the green, as you can see. So interesting day. They started trading today, by the way, another cryptocurrency at the CME group as a futures contract. The Ethereum, I think it's, we call it Ethereum, but I think it's Ethereum. And see what the first day goes. Got to get a lot more days under our belt in order to get a chart on it in the futures. PAVE, I happen to be one that still likes this, and the reason is I can't imagine the Biden administration not saying they're going to do an infrastructure bill, and I can't imagine the Republicans really fighting on them on that going into the midterm elections. Now, I don't know how they'll get it done. It won't be easy, but that's what I think. As you can see, the market's got still a pattern of a lower low and a higher high. It filled all the gaps in the chart. There's layers of resistance up here. The market's not trending. It's the first time that we're staying over the 18-day moving average of closes, so that'll be something of a fighting point on pullbacks in the market as well. You're far away from the upper Bollinger Band resistance of 22.23, so this is the zone that I think you're going to fight in for a little bit, and momentum is still up. So I have momentum up. I have the bias up since the market's over the 18-day moving average of closes, but I am not trending. I'm getting a vertical move to the upside. I call those vertical price rises. Here's another vertical price rise, a high, you might call it, right? And these are your cannabis ETF. Look at how this market's gone. I picked up on this and brought it back to you when I saw the market working itself finally off back to the 18-day average. And I was looking for a rally here. I got it, but it's way more than I thought it was going to get. And the market has now got, 4 days in a row over the upper Bollinger Band. It is overbought. Pushing 5 is hard in futures. I noticed that you can go more than 5 on ETFs. I think it has to do with them trading 8 hours a day in futures, about 23 hours a day in many of the futures. That doesn't matter. The market is still in an uptrend. Pullbacks underneath the lower Bollinger Band should be expected. In SMH, all right, this market's bullish again. You know, I've been looking at it. I don't understand why the public didn't pick up on this earlier. I was reading how Ford has had to cut the F-150 production. This is their best-selling model. For what reason? They can't get the semiconductors. And this market's just drifting here. I don't get it. You know, I'm not the world's greatest fundamentalist. I think I can hold my own against chartists anywhere. But I've been looking at this market as bullish. Then I saw consolidation, and I still see the market trying to break out to the upside. Would not be surprised for new highs against that 247.63 level. I'm wrong in this leg of the upside. If the market gets under 242.34, everything's pointing up at this point. In XLI, trend up, bias up, but overbought. So maybe it can take a swing up here. I have my doubts. It's already overbought. Markets that get overbought early on have some problems. It's the industrial sector, still looks fine to me. Pullbacks to the 18-day average, I'd expect to see support. You don't want to see it take out 86.79 if the trend's to stay up. In the energy sector, it's up and away. I think that these guys are smoking some of that THCX, just the way you're going. There's a number where the market's building an awful lot of the COVID benefits of the vaccine into the marketplace. The next highs are up here, and they're right against the upper Bollinger Band. This is going straight from 38.94 to 44.34. It's a big move all of a sudden. Hard to catch. we knew enough here as we were talking that on the break against the Bollinger Band, in unison everybody, what are you supposed to do the first time you hit it? Take money off the short side. You cover shorts. Same on the upside if you're long. So I think they did that, and then I think they got stopped out of the balance of their position if they didn't take it off there, and it's just gone on a world of its own. QQQ, same thing, bullish, way overbought. Resistance, 335.86. The market, again, one of these vertical price rises of $20. And in order to catch a move like that, you're just picking bottoms. Now, some people say, they bought the 18-day average. Well, congratulations. But you have lower highs, higher lows. I don't know what to do with that. In the emerging markets, so the market's finally paying back. This was a trade that gave people from the first of the year fits. This was one of the popular trades of the year. The other real popular is to be short the dollar. The dollar's still giving them fits, but you're coming back to life here. You've recovered an awful lot of ground. My work just says lower high, higher low. Not a trend, overbought, bias up. Maybe you make it to 76.24. I've got my doubts, but if it did, it's not a surprise to me. In GLD, this is a bounce and still a market that's fighting to get out of its downtrend. Now, today's high was 172.40. The last rally high was 172.59. So you're still in the patterns of lower highs and a lower low, which is bearish. You had been oversold. You hit the lower Bollinger Band. Where's the cover zone? First time you hit it. What will the pros do here? My instinct is that you would say that they'll sell the 18-day average, and I would tell you, no, they won't. If that number is like this at 172.67, whatever that 18-day average is, if it's above 172.59, you're not in a downtrend anymore. So I don't think they will. I don't think they're going to do much of anything right there. In the gold miners, you had one shot to hit that lower Bollinger Band. Ta-da! Boom, right back up. What's the trend? You haven't had one. You've had a higher high, lower low, but that was reason not to be short anymore. Sometimes you can't catch the trends. If you think every technique can, God bless you. It's impossible. But what I like about what I teach is it also tells you what you're not supposed to do. In other words, you hit that lower band, you're not supposed to hang around your shorts, and if you do, got to have that stop way, way down. Market paid off. What about TLT? Still bearish. You've got to take out 49.50, this high of Friday, 49.57 exactly, in order to negate the downtrend. You're very oversold, not embedding, really down hard and dirty at this point in time. FXE, well, the resistance is still back at 113.58. The market is oversold. It is not a sale on rallies. It got down the other day, and I know what I said. I said, you're now into the area where you do what you want, but I think the pros are taking their money off. That combination often of a 100-day or a 200-day moving average and a Bollinger Band, it's lethal. Market often turns on it. And that's what you're getting here. We'll see if the market can go back and test it again. And that's where I'm at on these charts. Now, for those of you that are new to watching me, you might want to keep up with our guide to technical indicators. And what this is, simply put, we've put together volumes 1 and 2 to teach you about the different indicators that we use both here and are popular amongst traders. And different types of charts, area charts, price charts, candlestick charts, bar charts. There's all kinds that you can work with. The different types of moving averages, oscillators. I like slow stochastics. You like, I like this. You like that. You know how that goes. Songs. Our MACDs, RSIs, Elliott Wave, Gann, all that. This is a primer on that, and to me, one of the most important things, money management. If you don't manage the money in the real world, you don't survive. You have to know, as important as your point of entry, where are you wrong? How do you get all this information? How do you get an idea about it? Just go to our website, www.iraepstein.com. Bottom right, free offers, take advantage. I'm Ira, see you tomorrow.